All right, welcome everybody to What's New in Finance. We're going to share with you today tools and services and different things that can help you achieve all your life goals. Even though we have specific topic matters, we're going to make sure we have our panelists chime in, give information that could be helpful and informationable and provide information and knowledge that can impact your life. So regardless if you're an individual just working a job, you're going to school, if you are in a phase of your life where you're already retired, but maybe going full time in your business, you're a veteran, or you were in active service looking to come home and do something else with your life, we have many vehicles that can help people in all walks and trades of their lives. So it doesn't matter if you're a foreign national, whether you have a social security number or not, we have programs in all sides of finance that can help you get what you need. We're going to talk about everything from different type of loans, down payment assistance programs. We're going to talk about new investments that just came in the market that you can help with different leveraging strategies. So feel free anytime you can raise your hand if you have a question, but we do want our instructors and our panelists to be able to get to the end of their presentations, and we are going to open the floor up so that you guys can get more insight on what we're presenting today. Um, so our people we want to welcome today, we have Ms. Jennifer B.E. Johnson from Metro Realty 360. She's also a member of Buckingham Mortgage. We have Ms. Melissa Alvarado. Both of these women have combined experience, probably over 40 to 50 years in the industry, between both of them and both being a real estate brokerage. As Jennifer has been in real estate and has a lot of special programs, she'll give more insight into what she does. Melissa has been doing this for a long time as well. And then TK and I are part of the Business Master Wealth Builders LLC. We have multiple businesses together where we combine our forces to have resources to provide you information and knowledge that will help impact and benefit your life. One of the programs we will be rolling out this year, which will have once a week, we'll be teaching from any of these subject matters and much more with advanced strategies. But we do have an organization, like if you have a church, a community service, you're in a college, university, private school, we do have a national program that we can bring to you and your organization and be able to talk about any of these 8 core subject matters in a 10-week course period. So this pretty much is what Master Wealth Builders embraces. When we're talking to people, we just want you to be able to answer these questions. So with everything we're providing to you, we want to come in a holistic point of view. We're not coming just to provide you a product, a service, just or something we're not trying to sell you. We are here to give you information where we can be holistic consultants for you to be able to find something to help you reach your goal. So whether that's purchasing a house, starting a business, becoming a real estate investor, being able to scale your career in any subject matter or any type of line of work, we just want to make sure we're able to give you information or leverage other experts for you to help you reach your next goal. So we are into providing quality of life, meaning that we're going to put you in a position where you have health, financial stability, the freedom to make decisions without limitation, to you be able to achieve your goals, and to most importantly, live life on purpose and doing the things that you are passionate about. So that is the goal when we're giving you this information and tools as it comes. We just want to make sure each one of these things help you get to one of these goals in life. So today we are going to start with Miss Jennifer Johnson of Metro Realty 360 and also of Buckingham Mortgage. And she's going to present to us information on down payment assistance, but I'll let her tell you more about herself and what she does. Jennifer, you can take control of the screen and we're ready to learn.
So I hit share. Is that what I hit?
Yes, you hit share. Yes.
All right. There we go. Okay. So my name is Jennifer B.E. Johnson. I'm a licensed real estate broker. I own a boutique brokerage. I've been licensed in the industry since 2004. I've been a broker since 2009. I'm licensed in Virginia, DC, and Maryland. I also have my loan officer's license in Virginia, DC, Maryland, California, and Florida. I'm going to talk a little bit about down payment assistance and why that is so important. LaShonda, is your daughter, do you know, is she a first-time home buyer or has she owned a home before?
Hi. My daughter, she would be, well, I would be purchasing and she would rent from me. And I
Okay.
am not a first time. Well, I feel like I'm a first time home buyer now because I sold my last property in 2018.
So you would be considered a first-time home buyer.
Yeah.
Okay. All right. So just so you know, there are a lot of down payment assistance. Shoot, sorry. Um, there's a lot of down payment assistant programs. There's a lot of money out there. A lot of people don't even realize that it's there. So I want to go over a few statistics. 68% of renters cite saving a down payment as their biggest hurdle. So, um, if you do FHA, on average, it's 3.5%. If you do conventional, it's anywhere between 5 to 20%. Um, and so that's something to keep in mind. A lot of renters will prefer to rent, prefer to own instead of renting, but again, the down payment is their biggest hurdle. Um, a lot of people want to buy, but they just can't afford the down payment. So we have answers for that. LaShonda, you're in Maryland.
Yes. Maryland and DC.
Okay, all right. So these are some of the programs that are available out there. It just really depends on the area. And most counties or cities have a program. So as you can see, Loudoun County, we have Prince George's County on here, um, the Chenoa Fund, Virginia Housing, so the Hager City of Hagerstown. So it's just a matter of identifying where an ideal home would be, and then from there. You have the ability for the loan officer to research. Both the realtor and the loan officer, you should try and work with people who focus on, down payment assistance, first time home buyers, or in those two realms, or either one of those realms. Because a lot of times professionals in our industry aren't even aware that there are these programs out there. So we always try and encourage people to come to events like this to hear from the professionals. There's so much information on the website, and on the internet, but a lot of times it's just hard trying to figure out like what is what. Okay. Um, so here's an example. Some of the down payment assistance programs are grants, um, anywhere between 2 to 3.5%. They're forgiven at closing, which means that you don't have to pay it back. So let's do simple math. If we had a home that was 300,000, right? So at 2%, that's $6,000 at 300,000. If you were doing 3.5%, that's $10,500. So just imagine if you could receive that type of money. Oftentimes you don't have to do anything for the money. Sometimes you may have to go to a class, but even being able to go to a class and learn about home ownership and things like that is still a valuable use of your time. Some of these grants are forgiven at closing, so you're no longer responsible for it. Down payment assistance programs are available throughout all states except for Washington State. I'm not sure why, but and usually there's no resale restrictions with full flexibility. It used to be where if you got a down payment assistance program, you had to wait in order to sell the home, but times have changed for that. There's also flexible cost coverage. So if you're asking for seller concessions, what that means is you also need money for closing costs. So again, at 3.5%, on average is 3% on a $300,000 house, it's $9,000. So you may want to work with your real estate agent and also your loan officer to see if you could also potentially ask the seller for closing cost assistance. Now, what's interesting is right now it is slowly turning into a buyer's market because the market is softened. There's a lot of people with us playing dodgeball that people are uncertain if they're going to have a job. So as a result, not as many people are looking to buy, but if you can, and I will say this, if you can afford to buy now, and then eventually refinance. the appreciation of homes is not going to ever go down. It may slow down, but it's never going to go down. So definitely work with your realtor and your lender as far as see if you can come up with some concessions. Most of these down payment assistance programs have a minimum credit score of 580, and then 620 if it is manual automatic underwriting. So there are still programs out there, even if the credit score isn't, at the highest, like high credit rating in the sevens or eights.
Question.
Yes, ma'am.
So, in 2018, when I sold my house, um, so my credit score is seven something, maybe 720.
Okay.
But on my credit report, which I just looked at the other day, I was supposed to go to closing in August, but it got pushed to September, and I didn't pay the August mortgage because of course I thought I was going to settlement. So that is still on my credit report.
We
Is
can
is
talk
that
with the
something I can explain?
you can talk with the loan officer as far as like if that's going to impact you. It may not because it's been so long ago. So that's something that, so the first thing is you are considered a first-time home buyer as long as you haven't had ownership in a home in the last 3 years. So you would be considered a first-time home buyer. But certainly talk with I believe if Shantae is doing the loan or Melissa is doing the loan, talk with them about that. It may not be as impactful because it was so long ago, right? That was 8 years ago. So,
Okay, so I was just looking at business funding as well, and when I spoke to someone, I'm not
I see where
sure.
you're going. I see where you're
Yeah.
going. It's showing that late out there. Talk with the loan, I would give Shantae a call, Melissa or myself a call. One of us can look at it and try and see, if you can get it off. But I now with the business funding, I do understand what you're saying. Like you want to make sure that your credit is pristine and you look credit worthy. And you may, if you can't get it removed, you may be able to write an explanation or something like that. Next time, that's where your realtor should have talked with the lender, and you probably should have paid it if you could have, and then got the money back, right? So we never want in real estate, we're a team, right? Whether it's the real estate broker and the loan officer, the real estate agent or broker and the title company, we're all a team. When something happens and you get delayed with closing, you should always talk with everyone to see how that could and could not impact you, and if there's anything that you can do to prevent that. Okay.
Okay, thanks.
No worries, no worries. And then, certainly offline we can talk about, you mentioned that you want to buy a condo and your daughter would move in. So that may come with some complexities. Like if you're not going to be your primary residence, you may have to put more down, but we can certainly talk about that, later on. And I do want to go back for a moment talking about appreciation. Um, Again, the masses are like, oh my God, it's a horrible time to buy, it's a horrible time to buy, it's a horrible time to die because the interest rates are high. Yes, the interest rates are high, but again, if you can afford to buy, you should buy now because the appreciation, even at 3% on a $300,000 house, that's $9,000, right? So now imagine you're going to pay $9,000 more next year. And if it goes up even more than that, 3% is a conservative figure. It just depends on where in the area, whether you're here in Virginia, DC, or Maryland, or if you're in another state. So that's something to take under consideration with regards to purchasing a home. There's also down payment assistance that look like a second lien. So anywhere between 3.5 or 5%, and there's a mortgage in second position. There's usually no income requirement for it, and it is forgivable or repayable. So you will have to pay it back, but it is an opportunity for you to move in if you don't have the money. Minimum credit score for most of these programs is 620, and there's usually no first-time home buyer restrictions. And so conforming and high balance loan limits. So if you had a home that was, 700,000, 800,000, those types of homes are available for the program. You also have, for example, employee assistance programs. There's a lot of employers out there, a lot of industries where, and this is just an example, where you can also receive assistance from an employer or from a county. And then it's usually specific to a county or a city. And sometimes it's specific to a profession. So it just really depends. Certainly talk with, Shantae, and then find out what programs are available, mention your goals, mention what you want to do, what you don't want to do, and then from there, um, you know, she can find you the best loan program, down payment assistance program that's out there. Again, here are some of the other county and city programs. As you see, Prince George's County, DC as well. The challenge with DC, but I still tell people it is worth trying. A lot of these programs are running out of money, but it's better to check than to just assume that they don't have money. Don't just take the news for granted and say, oh, yeah, well, DC dried up or Prince George's County dried up. Like, definitely talk to the professionals. Don't rely on the information on the internet because oftentimes that information can be misleading or incorrect. So that's something else to keep in mind. So that is everything. LaShawn, did you have any, LaShawn, did you have any questions for me?
No, no questions. I am just trying to see which direction I want to go because I am retired. So I'm
Okay.
looking at to see like my income because I live off my pension. I work part-time. Um
Probably DS, I would say just based on quickly what you're saying, a DSCR loan may be the way to go. I don't know. You mentioned that you want to buy it and have your daughter live in it. So you may not be able to do the primary residence like you're thinking because you may not be living there and you don't ever want to lie on the application. So a DSCR may be the way to go. And then it would allow for the income of the rent to be what qualifies instead of your pension because you may not be able to afford the home if you went the traditional route. So you may have to come up with a little bit more money down, but you're not having to provide tax. And Melissa will go into this a little bit more. You're not having to provide, bank statements, tax returns, pay stubs, things like that. So that may be an option for you to do that. And especially since you have the renter. Um, that may be something viable. Did you have any other questions?
no, that was it.
Tell him we said hello. Hi. Well, thank you for your time, Shante.
Yes. Well, thank you so much, Jennifer, for giving
Thank
us
you.
that great um, bunch of information and contact in regards to down payment assistance programs. A lot of people don't have that information or even know it exists. And if it exists, they don't know that there's so many different options. So that was good to hear. Um, Moving right along, if you have any questions, Jennifer, you can still drop your information in the chat, but this is her information. If you want to capture it, since LaShonda, you're here, this would be her phone number, email to reach out to her so you guys can set an appointment and talk in regards to the type of properties that you may be looking into. And she is the person that can help you with that. All right. So Melissa, how are you? Welcome, Melissa. Thank you for officially
Hey,
rejoining us. I know you were on your way home from work, so we appreciate
yeah,
you.
absolutely.
You're all the way up
Hello,
and moved out to
everyone.
270. Hi, Melissa. All right.
Hi, hi, hi.
So Melissa is going to be sharing with us the next part of what we're getting ready to go over, which is in regards to down payment assistance programs. I'm sorry, not down payment assistance. I'm sorry.
DSCR.
She will be talking about the new DSCR programs, and we're just going to give you some information tidbits on the bank statement loans for business owners. But we're probably going to go over that in our next segment next month. But we just still want to let you know what's available to you and out there, if you want to go this route as well. So, Melissa, I'm going to stop sharing my screen and give you the opportunity to share and to present with us and give us any information that's helpful from that wealth of knowledge that you have.
Awesome. Let me pull up the document and I'll have it shared with you guys in a second. Here we go.
All right. So, if you could tell us a little bit about yourself and your experience and your level of expertise in this field of work.
Yes, ma'am. So my name is Melissa Alvarado. I've been working with Buckingham Mortgage. It's going to be coming into my 5th year. I specialize in down payment assistance, conventional loans, investment loans. And this is one of the passions in my life, just to help people to achieve their goals, whether it's in real estate as a real estate investor or purchasing their first home or their future home, right? Of whatever the strategy they want to go about. It's a fantastic, I want to say it's a great and very um I forgot about the word, I'm sorry. It's a fantastic role, the one that I have, just to being able to help people. And I'm happy to share all this information with you guys so you can go ahead and utilize it in whatever plans you have for the near future. Okay. So today we're going to be going over DSCR, which is an investor's loan. And DSCR stands for debt service coverage ratio. And well, this is one of the solutions that we offer for clients that want to start in real estate investing. And this particular program is to purchase a home and rent it out. Okay, so you're going to purchase it and you're going to lease that property. You're going to become a landlord, right? And what a fantastic program we have here. Let me tell you more about this. The DSCR loan, you are not required to show your income. You're not required to show your work history. We don't have to count make sure that you have 2 years or anything like that in business or in an employment history. It's really, really straightforward program for you to be able to step into an investor's role, right? And this helps you just to build up your portfolio of real estate properties. And this type of program, like I said, it is so straightforward that is designed in a way that you can continue to utilize it to your future purchases. So it's not a one-time program, it's a program that you can continue to utilize it as many properties as you would like to purchase. Okay. So what does the SCR means? I know we said we stands for debt service coverage ratio, but a DSCR looks into the net operating income of that property that you're going to purchase. Okay. So you are not going to have to show your obligations, your liabilities, and we're not going to be calculating income or debt to income ratios, none of that. It's very straightforward. Once again, I can't stress that enough. We want to make sure that you have the down payment for the purchase, that you have the funds to close for your closing costs and everything. And we also want to confirm and make sure that this property, the net operating income or the rental income, also known as a rental income, is going to cover the mortgage payment. That's basically what it is. Your rental income is going to be replacing your monthly income. So, like I said, we do not look into your employment history or monthly income because we are going to utilize the net operating income of the property that you're purchasing. Okay. Most of the time, the only thing we can use in this type of ratio is 0.75% of your income, of the rental income. So with this program, we can use 1-to-1 ratio, which means that if your house is potentially going to make $3,000, the 1-to-1 ratio would be that you are going to pay $3,000 or less in mortgage payment. Of course, we want to make sure that you make a little bit over that and your rental income. However, we at least need to meet the 1-to-1 ratio. when we look into those numbers, okay? Why would you choose a DSCR loan? Well, like I said, there's no personal income verification required. It is suitable for real estate investors that are actually first time or more experienced. And it's focused on rental income potential. That's it. We are not going to focus on anything else. We just want to make sure that the house is going to produce the income that you need to pay for the mortgage payment. Okay. So, key benefits to this type of program, which I said is fantastic, and we want to make sure that we take advantage of it. It is flexible. We can utilize it for residential properties if you want to do short-term rental as well, such as Airbnb or Vrbo. We can definitely utilize the program for this as well. There's no limit on number of finance properties. One specific bank may have a limit that you can purchase through them, but it doesn't mean that you can go to another bank and just purchase through a different bank and get the same program. So it's all about strategizing and make sure that we're looking into the best terms and the best investor that is going to come in and partner with you to get on this project. The approval process is faster because, like I said, we're not going to look into liabilities and debts and whatnot. No, all we want to make sure is that the house is going to make the rental income that is needed to pay the mortgage. All right. And then higher loan amounts based on income potential. Yes, you can go. We're going to look into this a little bit more in the discussion. But we have up in the $1 million that we can definitely do this type of program as well. There are different types of DSCR loans or variants. We can look into purchasing a 1 to 4 units, which for clients that they say, I would like to start in my portfolio with at least a multi-unit property. We can definitely use this program for that. We can use it for 5 to 8 units as well. If the client has an ITIN number, which is someone that does not have a social security number, but they do pay taxes and then IRS provides this number, we can definitely use this program for them as well. Non-warrantable condo DSCR. A non-warrantable condo, it is a condo that is not approved by FHA or VA or one of our conventional programs. And we can definitely do them through this variant of programs that we have. And we also offer these programs for foreign national. And foreign national would be someone that maybe they do business here, but they do not live in the US. They live outside of the US, and this is only for investment property. All right, so what else we have? So the SCR loan program, we can finance up to 85% of the property, which means if we're financing 85% of the property, it means that you would need to come out with 15% down payment minimum, right? And it's all going to be based on that ratio that I mentioned before. And when we talk about the 1-to-1 ratio, always remember that the potential rental income is going to cover the mortgage payment, okay? And like I said, it starts at 15%. It could be a little bit more than that, just depending on the property and the potential income for that property. And if you already have an investment property and you want to take some money out, we can utilize up to 70% of the value. Okay, and that would be another option to utilize and maximize on this program. I think I mentioned that it goes all the way up to the millions. So 3.5 is one of the maxes that we use. Sometimes some of our investors, they do have exceptions if we can present the right candidate, if we can put together the right program. But this would be the closest max that we have on this DSCR program. Minimum FICO score, we have a 620. If we have a 620, I just want to give you a heads up, you may not be able to start at a 15% down payment. You're probably going to have to put a little bit more because the lowest the FICO score, the highest is going to be the down payment. So we always want to make sure that we have at least, I would say 680, 700 in the FICO score when we look into your credit history. So how about gift funds? So how about if I have someone in the family that is we would be really happy to see you or see us thrive, and they want to help you and boost you in this new venture, and they want to gift you some funds for this purchase, well, absolutely, they're very welcome to do so. We can utilize those gift funds, and they are allowed to be utilized for the down payment or down payment and closing costs. Okay, there is a minimum required amount that the buyer needs to come up with. However, we want to make sure that we let you guys know that definitely you can utilize gift funds for this program. And then there are different terms. We have 15 years, 30 years, and we also have a I believe a 20-year for one of the investors. We just need to look into the right terms and see which one is going to most be the most beneficial. However, the lower the term of the month, then of the years, then the higher the payment. And we always are striving to get that 1-to-1 ratio. So it's really important that we keep that in line. Okay. And then we mentioned about the 528 units. In this 528 unit program, this type of loan, when you have more units in the property has more units that are going to be rented out, the maximum LTV is 70%, which means that you will need to come up with 30% down payment. We also have a max of 2 million, and we definitely need that 1-to-1 ratio. There's also going to be another layer here with the FICO score, which is 680. And some of the investors allow mixed use eligibility. So mixed uses means that maybe you have 3 apartments on top and you have a shop downstairs that has been rented out. So that is also another way to do the DSCR program. We can utilize it for this type of scenarios. And then we have the I-Teen DSCR loans, which I mentioned. I-Teen is a person that does not have a social security number. However, they do pay taxes, and they are assigned an I-Teen number, and they can definitely purchase through this program. The maximum LTV is 80%, which means that they have to come up with 20% minimum, 20% down, meet the 1-to-1 ratio, and then FICO score would be 700 and above. There are also some loan limits on this type of programs, but we can always look into see who gives us the highest amount. Short-term rentals are allowed, first-time home buyers. In terms of investing, or I would say first-time investors are welcome, okay? And transfer appraisals are accepted, which means that if you started this loan with another lender and it didn't go through, it didn't go well, you are welcome to bring that appraisal in, and we will make it happen in our office and with all the lenders that we have available to you. And then I spoke a little bit about the non-warrantable condo. A non-warrantable condo is a unit, is a condo unit that has not been approved either by FHA or VA or the conventional agencies that we have, such as Fannie Mae or Freddie Mac. So when they talk about approve, when we say approve, it's because these agencies, they want to make sure that this condo meets all their standards, okay? And their standards are not only financial standards, or they're not limited to that, but they also look into making sure that the finances of the property, the whole property at all overall, they have healthy finances, that they are no lawsuits, that they are compliant with structural and compliant with the counties where they are being built, or they have been built, or where they are set, right? And all these things are looking to all those factors and components, and then based off of that, they decide if this condo is warrantable or not. So guess what? We can do this loan, right? We can help you get you into one of those properties that not everyone can. And our max is going to be 70% for that purchase. And the FICO score is starting at 640. Like I mentioned, the lower the FICO, the more down payment. So we're always going to strive to have at least 680 and 700 and above. Okay. Our loan amount, we have it here up to 3 million, and we always want to make sure that we are DSCR 1-to-1. Once again, the DSCR, the mortgage payment will be covered by the potential rental. Okay. So how about the people that don't live in the US, but they really want to invest in the US, and they are more than welcome to do so. The 70% loan to value is going to be their max for the purchase. So they need to come up with 30% of those funds. There are some countries that they don't have a credit agency like the ones that we have. However, we will be looking to a credit reference letter provided by their financial institution. And this is fantastic because that gets out of the way then. So that will cover for that credit report that will not be able to be generated here. And then that will cover for that part of the program. They will also going to be required to have 6 months of reserves. They got to show, and they have to make sure that they can show that they have money to make those next 6 payments. We are going to request that they DSCR 1-to-1 ratio as well. And then just a heads up, if you have someone, anyone that is a foreign national, there's no visa requirement. Like we said, no FICO is required because we will use the credit reference letter. And then again, no income because that's how the program has been rolled to help out those investors out there. Some of the things and some of the special features that are always great to mention as well is that you can close this property into an entity or an LLC. So let's say you are going to be the guarantor. Everything is going to be done initially under the person that is applying for this loan. However, if at the end, almost at the end of the process, they say, yeah, you know what, I want to put this under my LLC, and it's going to be vesting under my LLC title, and everything is going to be under my LLC, we can do so, right? We can just get that property and get it protected under the LLC or whichever entity form that you have. So that is also something that we can definitely provide for. And then we also have delay financing available. This means that you already purchased in cash, and you purchase this property under your name, and now you want to pull that money out because you used the funds that you had and you want to invest those funds in something different. We can do what is called a delay financing. And what does that mean? It means that we will treat your refinance as a purchase. So it would go by the guidelines of the purchase. You have to do this within 6 months of the cash purchase. So that way we can go ahead and do a delay financing on a DSCR program. So how about those properties that they already have a rental income, but not a conventional rental income, but they are more towards Airbnb or verbal or short-term rentals? Well, guess what? We can use a reporting system, a reporting tool that is available out there called AirDNA. AirDNA will make an evaluation of how much income this property can get on a short-term rental, and we could present that as the potential rental income. Okay, so let's say there's a property in the mountains, but in the mountains, people don't do long-term rentals. Maybe they do more like cabins and all that, and short-term rental. That's going to be the thing. So then we're going to have to look into providing an AirDNA or getting this reporting so that way we can get the actual potential income by utilizing the short-term rental. So these are additional tools that we can use when something is like not meeting that one-to-one because the conventional lease program is not there with the income that we need. So this is something that another layer that we can utilize to make it work. And then how about those properties that have ADUs, accessory dwelling units? We can utilize those as long as they're permitted. If you have an accessory dwelling unit, but it's not permitted by the county, then we cannot utilize that income. Maybe someone says, oh yeah, but I rent my basement. Understandable, that's more money and a little bit more cash to you. However, it would not be income consideration in this scenario because it's still one unit, right? And then based on the county, you still have one unit. So those are other things that we can look into. If there is an ADU, we want to make sure we want to use that income, that ADU is permitted. And ADU, I know I mentioned is accessory dwelling unit. However, just for you to understand, if you don't know the this type of concept, it's basically it could be like an extra space that you have at home, separate, maybe a little studio or an area that you have converted into a small studio or a small apartment type of area in your home. And sometimes people they just go ahead through the county and they get that permitted. There's other people that they just, there's no permit for that, so it won't be counting. However, I just wanted to give you an idea of some of the other things that we can consider if they are permitted by the county. So reserves, and I mentioned reserves on the foreign national, but when we look into someone that lives here, those reserves are going to start at 3 months with 3 months. Okay. We're always going to require reserves. Why? Because you are not always going to have a tenant. Hopefully you do, right? But there are going to be some times, maybe a 15-day period or a 30-day period that you're not going to have a tenant, and the bank wants to make sure that you do have some reserves to cover for those periods that you do not have a tenant in line. Okay. So you do want to show those 3 months. If it's a little bit more than that, this is always discussed at the beginning of the loan just to make sure that we're covering all our bases. And then we also have the interest only loan term available. And interest only is basically just that. You're going to be paying interest only for the first 10 years, and then it's going to amortize interest and principal for the next 20 years. Why would we use this? Because if it's interest only, it's going to be a smaller payment. It's just a strategy to get you in the home. And then once 10 years have passed, then the remaining portion of your principal is going to be divided by 20 years in payment. So it's just another strategy, something else that we offer. And if it's something that we may think when we are going over your scenario and we're studying the property that you're thinking on purchasing, the money that you're going to put down, and everything, considering all those factors, if we think that interest only loan term is going to be beneficial to you at the time, then we'll discuss that. But most of the time we go with 30 years terms, and because that's one of the options that you're going to have, the 30-year available for your loan. Right. So some of the marketing opportunities that we have here, and just for the sake of us understanding what are the opportunities or who could be a potential client. Well, once again, people that would like to have a short-term rental, they want to start the business of hosting people. They want to invest into a property that is going to rent for a long-term rental instead of short-term. We will also make sure that you understand this would be a beneficial program for you. First-time real estate investors, and you want to start your portfolio and you want to get your feet wet into this type of business, you can definitely utilize the DSCR program as one of the financing options for you. Also, this could be used for foreign nationals and IT borrowers, like I mentioned. And if you are self-employed or a business owner, and once again, we're not looking into regular income documentation in this program, this is definitely the program that you're going to need to get into the investing world. Okay, so that is it for me. If you have any questions, this is the moment. And if not, we will push it to the next person. Thank you, everyone. Yes, Jennifer, you have your hand raised.
Hey, I just thank you, Melissa. That was a great presentation. Everyone, I just
Thank
wanted
you.
to give you all two reminders with regards to short-term rentals. Definitely work with your real estate agent or broker and loan officer to make sure that you can do a short-term rental. Like in New York, they just recently banned them. So definitely do the research and talk with the people on your team. They're going to help put the deal together if you have to, have a license or anything like that. And the second thing is unwarrantable condos. That is something that you should also talk with your team about, because that could affect your resale in the future. So while it may be a great condo, unwarrantable condos sometimes have a higher rate, but also too, they may be more difficult to sell in the future. So if you're not sure what your investment term looks like, or not sure that you even want to buy a condo, definitely talk with the people on your team to see if it's a good fit. Don't just assume that short-term rentals are great. They may not be, and I'm not saying they aren't, but a lot of states, if you're not grandfathered in, then you really can't get into the market. So just make sure to talk with your team, um, both your realtor, real estate agent, and your broker and your lender, because they're going to be able to tell you, um, what makes the most sense based on your vision and come up with a plan. So,
Yes, and that's a great point. You do want to make sure that you're making a savvy investment, and having someone on your team that understands the market and understands the real estate in your area is going to be your best bet, especially if you're starting in this real estate investing business. So that is a great point. Nonetheless, there's a lot of non-warrantable condos in the Florida area that they do the DSCR very, very well. It's all about where you're
right.
purchasing, right? And that's when the actual knowledge of the person that you're hiring as a real estate agent comes into play and strategize with you as a team. So, but thank you for your thoughts, Jennifer.
Thank you.
All right. So do we have any other questions from the folks on the call?
All right. Well, no other questions?
Awesome.
All right. So Melissa, don't forget, I am sharing my screen. I did want you
All right.
to, can everybody see my screen? Can you see it, Melissa,
Not
on the
yet.
bank
Not yet.
statement?
It's coming.
If you could just give us a little insight. We're going to have more webinars like this. We're going to go really into detail and information, especially for people that are looking to purchase very soon, or investors. But this is something that we just got hip to. It just came out. Remember, we just did the training on it, Melissa, about a couple of weeks ago. And most
Mhm.
people are not aware that this loan exists. So Melissa, go ahead and just give us the tidbits, but we will be doing another training or giving more information on next month in regards to this matter.
Do you want to go ahead and share the flyer?
Yeah, do you see it?
No, not yet.
Okay, I'm sharing it now. Let me stop and reshare.
Awesome.
All right. All right. Can everybody see my screen now?
There we go.
Okay,
Mhm.
great.
Yeah. So, uh, we have programs that are conventional. And when we talk about conventional programs, those are going to be your normal government loans, such as FHA, VA, conventional Fannie Mae or Freddie Mac, USDA. Those are our regular programs. And those programs are going to require you to show all your income base, and the income is going to be calculated based on your tax returns if you're self-employed, or based on your W-2s and your pay stub. And the reason why I'm bringing this up is because there are other solutions, especially for those self-employed out there, that yes, we have a business. However, there's a whole bunch of things that we need to expense on that business on our tax returns, and then they're not gonna look as strong as we know they are because of those expenses that we added into our Schedule Cs, or depending on the other type of business organization that you have. So having said that, we are definitely have those programs. However, we also have solutions for this type of clientele that we can provide you some programs, and we're going to base your income on 12 months of bank statements, whether they are business or personal. It all depends on what type of industry you're in. We also have P&L programs where you're going to request from your accountant to prepare a P&L for you, and we're going to use that income from your P&L. We also have, for those that are independent consultants, or um, people that have a 1099, we have those programs as well that we can utilize and capture that income information, and we'll make some calculations with that. And we also have many other programs that are going to help all of those self-employed like me that, exactly what I mentioned before. In on paper, it may not look too attractive. However, we know that that income is coming in. It's just that whatever is allowed for us to expense, depreciations and all those things that we can add into our tax returns, they're going to make those tax returns the net profit for that year is going to be smaller. So, but yeah, we won't be looking into those categories. We are going to ultimately, with this type of solutions that we offer, we're going to be able to provide you with other options, like I mentioned, which are called alternative docs. And alternative docs, we can use bank statement once again, 1099, P&L, CPA program. So we have several, and we definitely want to bring this information to you guys because they start as little with a 10% down payment. And we can always discuss it and see if this is something that would benefit you. But yeah, this is the plugin for the next webinar.
All right. Thank you so much, Melissa. You're awesome for sharing. Does anybody have any questions for us in regards to anything that we just talked about? I know we gave you a lot of information in a short period of time. We talked about the down payment assistance programs, grants. Jennifer, Metro Realty, Melissa went over very well about our new DSCR programs and what they entail. And along with, even though we're not going to go deep into bank statements today and some other things that are coming out, but we just want to make sure you're empowered with the tools that you need to get to your next level and to reach your goals. All right, so before we get into the next segment, I do want to pivot, but first, let me make sure you have Melissa's information. So if anybody needs to reach out to Melissa to inquire about the programs that she just spoke of, and if she could be any help to you, make sure you take her information. You can screenshot or write her information down. Melissa, you can also put your information in a chat so everybody can save their chat and have everybody's contact at the end of this meeting. We always want to be organically networking, meaning using each other to help each other for us to reach our goals. So make sure you reach out to her. She's a great asset. And if you have any questions, you can reach out to her on tomorrow. All right, so before I get into the next segment of what we're going to talk about from the Master Wealth Builder standpoint, I do want to acknowledge some of the people we do have here today. We do have a special guest with us today that has joined us. And I just want him to take a few moments because we are on the real estate side of things and talking about things that can help investors. We actually just attended an event last night called Cash Flow Breakfast Club. It's one of my favorite books that I've been using over the last year and a half. Even though I have been in real estate financing for over 20 years, I never was my own investor up until a year ago. And I will say, out of all the investor trainings that I've ever been to, the events me and Mr. Pryor have attended, his is one of the best content information that you could possibly get. This book is phenomenal. I have recommended it to other clients that I have and other investors that I know. His name is Mr. Omni Casey, and he does a lot all over, I guess, the world and country. So, Omni, if you can unmute yourself for just a moment or so, let people know where they can find you, how they can get a hold of your book, and when you have more classes in our region. All right. I think I had to allow you to talk. You can go ahead.
Can you hear me now?
Yes, I can.
Thank you very much. Happy to be here. Great content. Appreciate it. Yeah, we teach real estate investing across the US, really. We have 40 plus locations, but we started it in the DMV. So if you're in the DMV area, there's 5 or 6 locations every single month that meet, free education, very, very similar to this, try to provide some value. We're on meetup.com. So depending on where you're tuning in from, we have a New York location, California location, Arizona, Texas. So Happy to, if you tell me your specific location, happy to send you where it is. But if not, you can find most of our locations on meetup.com. Once again, free information, meeting in person with investors. The book is on Amazon, both Audible and in print and digital copy. But appreciate it.
All right. Thank you very much, Omni. If you can put your information in the chat, and how people can reach you and attend your events, that would be awesome.
Will do.
All right. So I'm not going to keep everybody long. I know everybody has to go to work this morning. We had a lot of good content. In our next session, we're going to talk about a lot of other things, but TK and I are going to give short insights and straight to the point about what's happening on our side of the world and the things that we're doing right now and some of the new things that just came out in regards to vehicles that can empower you to reach your next level that will help leverage you with real estate as well. Okay, just give me one moment. And Jennifer, if you can let me know if you're able to see my screen share.
I just see all the names right now.
Okay. All right, my computer just got a little wonky on me real quick. It's saying go to bed today. All right, there we go. I'll brought it back up. So I should be able to see it now. All right, sorry everybody for the technical difficulty. All right, can everybody see my screen now? All right, so very quickly, we're going to go over the new IRA programs that just came out literally on last week, June the 4th. You know, the last time we had our meeting, I did go into more detail in regards to digging into how annuity IRAs work. We have found in our career, I've been doing the annuity side of investing. I started out in traditional banking IRAs and dual securities back in 2001. I did start working with annuity companies in 2008. And over the years, these vehicles have evolved. So if you were at my last meeting, you know, I dug into like the basics, making sure people had education on, you know, the purpose of different vehicles. We believe in diversity across the board, what 401ks were created for, what the purposes of IRAs, Roth IRAs, what do they do, how you hold real estate inside of IRAs, or so on and so forth. But there's all so many different vehicles and new things that people are not aware of how they are engineered and how they work and how they can benefit you, especially with collateralization and lending options. So what we focus on is leveraging redirection of income that you may already have, whether if you are a real estate professional on this call or somebody that's going to be investing or purchasing property, where you can redirect money you already have. One of the people on this call already is participating in this and was able to roll over a non-active TSV into one of these accounts, and will be purchasing real estate pretty soon and can be used as a fixed asset when going to purchase new property. These type of vehicles have the ability to, depending on the design or the type of vehicle you pick, to create multiple streams of income later on that can pay you in pension form, depending on how the money was directed into it, whether it was contributed, tax deferred from an IRA, traditional IRA, or a 457, 401k, 403c, 403b, or any of the tax coded vehicles, determines how the money is distributed to you. Now, if you live in a tax-free state, it will come to you tax-free. So we definitely do believe in diversification in investments. Of course, real estate is one of the biggest ways to earn money if you are receiving income on a yearly or monthly basis. But we do want to show you how you can leverage other vehicles to increase your portfolio and your net worth as well. So the main vehicle that we're focusing on today is called a fixed index annuity. Just to remember what the basics of what the annuities do and how they help in regards versus to a traditional IRA or Roth IRA. They guarantee principal protection they guarantee you growth, and the money does grow tax deferred. So if there are market downturns or volatility in the market, just like what Jennifer kind of referred to it earlier in regards to people deciding whether they're going to purchase or do other types of strategies, well, these are things that are protected against those type of market downturns. So as of June the 4th, one of our biggest annuity companies that we do a lot of business with, we are broker with companies that have the best type of making sure they have the best quality. They are very reputable, and they're the top in the game in the business. And they don't have as many restrictions as other annuities have had in the past. So they are offering on a vehicle called Asset Shield, which the purpose of Asset Shield is to focus on accumulation of growth. They have what are called premium bonuses, meaning anything you contribute to this vehicle from the minimum amount of $5,000 to a maximum of 1.5 million, whatever that is that you contribute from any source, whether it's a sell down of a stock, whether it's a rollover from a retirement, from a sale of a property, whatever that may be, they're going to offer between 16 to 23% on all contributions, depending on which program you choose. The difference between the programs are basically it's a 10-year contract. And the program that gives the 16% on all first year contributions is just a flat bonus contribution. So whatever you contribute, you're just going to get 16%. There's no annual fees. There's no enhanced riders. There's no enhanced performance on it, but they will guarantee you at least 16% on the first year. The rest of your earnings from years 2 to 10 is just based on performance. So you're still getting market credits called in the manner of participation rates. Participation rates is that index between where the market actually performs. Let's say you're writing the S&P 500 and you do have a point-to-point strategy. So if the S&P is at 57%, you might be getting 100% point to point. It depends on how much the participation rate is at that time or how the particular trade line is performing. So it could be the NASDAQ, it could be BlackRock, whatever the design you decide to customize, you would be able to earn still, even in the first year, if the market earns, you'll earn on top of the bonus rate. But at least you're guaranteed if the market completely dies out this year, if we have a market crash, if we have a recession, you will be guaranteed at least that percentage rate on all contributions. But you do have the ability to earn more if the market performs. The other program is the difference is that you're getting enhanced riders. So meaning you're being charged 95 point, I'm not 95%, 0.95% annual fee, meaning so that if your first year rate was 23%, you're pretty much it's 1% to be able to participate to get the enhanced rider. So it has nothing to do with the bonus. You can choose to opt out of it at any time. But say, for example, you're on the NASDAQ. If you have the enhanced rider, the NASDAQ may be getting 100% participation in the market. I know with this enhanced rider right now is offering up to 190% on a 2-year participation if you're riding the BlackRock trade line. So in our next meeting, I'll go deeper for people that don't understand what a participation rate or don't understand marketing crediting. But the bottom line, you're not going to take losses. And an example of it is, let's say a person contributed $100,000 or at the 16% rate. Well, on day one, they're going to earn $16,000 of interest just from putting the money in this account. And the good thing about this vehicle, it also allows 2% of contract value to be withdrawn if needed in the first year. I usually do tell people, not to do that in the first year, only for the simple reason you want the interest to compound, you want it to earn, and you want it to grow based on all your first year contributions. But you have the ability to do that. And the excellent thing about this, even though they're giving that big interest rate, you have the ability to systematically withdraw or up to 12% of that value every single year. So if you are a real estate investor and maybe you need that down payment for the next property that you're going to do for rental long-term, short-term, or mid-term, you can actually take that amount as your down payment for your next property. And now you're doing a double-edged strategy, which is advanced strategies of the wealthy, where you're able to just take the interest off of one vehicle without using your principal money, keeping your money in the bank, and using the interest to work for you to pay for your next property or even your next investment. So like I already said, the minimum you need to contribute is $5,000. It can come from any source, or you can also contribute if you're currently employed. You can contribute throughout the year systematically at a fixed amount, or you can just make contributions as you earn. So these are the max limits as long as the amounts don't go over $1.5 million if you're between the ages of 18 to 69. If you're between the ages of 70 to 74, the limit is 1 million. And if you're between the ages of 75 to 80, the limit is 750,000 per vehicle. Now, the key is per vehicle. So this is not like a 401k or traditional Roth. You can actually have more than one without needing to replace it. So if you wanted to have three of these vehicles and diversify your market strategies, one could be NASDAQ, one could be for other strategies. You can diversify it, and there are different vehicles that operate differently. So some of the key benefits of this particular index annuity is it does provide, if you take the income route, which the income route may have only a 10% bonus. And then there's some that don't have bonuses, but they perform very well. Whenever you decide to take the withdrawal, now with anything that's the income or the pension portion, you're not able to utilize it until you're over the age of 59 or 59 and a half. But if you want to utilize this while you're living, that the systematic interest withdrawal or taking out a percentage of the contract value every year with no penalty would be the way to access this vehicle. There are some of these vehicles that do offer with the income that if you do fall ill while you're getting an income distribution, it'll double the income in that year in up to 5 years while that particular rider is activated. So let's say your income is $60,000 a year. If your income is $60,000 a year, it will become now $120,000 per year. And the importance of this, being somebody that has experienced a medical illness that kept me from working, that this will allow you to recover, to put money into maybe other types of treatments, and then also be able to save money and put into other investments. The other key to an annuity versus having like an IRA or a 401k is that it does have a death benefit component, but it's not an insurance policy. So that if anything happens to you, the death benefit will be paid either to the trust, if the trust is a beneficiary, if a family member or a spouse, and they will still be able to participate or be able to receive the income or the money that's left. Now, you do have the option if you are married to do a joint. You can do a joint vehicle. You can do more than one of these, where that if one of you pass away, the survivor still will receive the benefits. And then this asset can also be leveraged in collateral lending, as I expressed already. So if you do have say 100,000 or 300,000, whatever amount of investment, you can take this to the bank and say, I want to collateralize it to obtain a line of credit or a business loan or even for real estate lending. And this particular vehicle can be owned by a business or a trust. So that way it's not just for personal uses, but this can be an additional savings to protect your business and your legacy and to be able to help with succession planning in your business. So the goal is for your money to always be working with you. And then pretty much this is just everything I just said, ways to leverage the annuity with whether it's real estate, to other investments, to starting a business, collateralization. And most importantly, we've been able to help a lot of federal workers or anybody, whether any sector of work or employment, where you lost your job, but you need to leverage. Maybe you have a retirement account, but you don't have any income coming in. There are ways to roll this money over in this vehicle, even take money out of it while you're rolling it over to cover your emergency expenses and still be able to grow it right back by getting the interest back. So an example of a client that we helped earlier this week, she actually had $200,000 in a TSP, but by rolling it over, she is going to now get on 23% interest, 23,000 on day one, but she is also able to take 20,000 out to help her start her business and she doesn't want to go back to work and also pay other bills. And so these are so many different ways you can strategize that people may have not have thought of, but it's really helping and leveraging people that want to get into real estate, start a business, or just to leverage an asset to make it work for them while they're in between jobs or starting a business. So right now, I'm just going to let TK, my partner, to chime in and to give some tidbits and notes because he's been working with customers recently with these same type of strategies, ways this can help and assist you. TK, you can take it from here.
All right, thank you. Um, are you going to bring up that screen again?
Oh, yeah. Yes.
Okay, so I just want to reiterate, this is probably new to a lot of people on the call. If you didn't know, or if you think about annuities in your grandmother's fashion, what I really want people to understand in the 21st century is that these companies compete for your business. So what they do is they come up with a specific product that separates one company from another company. So the incentive right now is to give you a deposit bonus. The deposit bonus, as you saw on the screen, if you can bring the slide back up, the deposit bonus is anywhere from 16% all the way up to 23%, depending on whether or not you choose a enhancement performance rider or whether or not you participate in additional riders. So that means you're going to get extra money from day one, but it's also the same deposit bonus on anything you deposit within the first year. So if you roll over your 401k, 100,000 that's rolled over from an existing account, you're going to get 23% at the high end, which is 23,000 from day one. And then anything you contribute within the first 12 months, you're also going to get another 23% on that deposit bonus. Now, understand the principle. Can you bring the slide back up, please? The
Yeah,
principle
you can't
is
see it.
still going to be, so I want to basically help you guys understand the concept of participation. You're going to get a 6.5 or 6.25% compound interest annual on your accounts. Participation points is the Costco thought process, because what the company does is they buy points at the beginning of the year by grouping everybody's money together. And what happens is if the market S&P 500 does 28%, you receive up to whatever participation points that they already pre-purchased. So understand, you still get your basis of 6.25 compound interest, but you earn an additional participation point based on what the market does, because they're going to use whichever market you choose as a barometer to determine how many additional credits you receive. So in the height of 2017, people were receiving somewhere around 43% if you add the 6.5 basis on top of your participation points. So think about that. For people who have cash from real estate, from people that have existing portfolios that's not very performing. Example she gave was clients that lost their job. They didn't know that when you do a rollover, you could do a cash out. I just did a client yesterday who rolled over his TSP, and then he only deposited 100,000 into the bonus account. He took 55,000 in cash as a cash back to him because he wanted to, do some other things with that money. So a lot of people may not know that that's humanly possible. It is. You just do a cash out at the time of the rollover, and you still get the bonus on whatever you deposit that's left over. So I want to enable you guys with this tool. You're not going to get 23% deposit bonus from anywhere else on this planet. And unfortunately, a lot of people don't know this exists. So when you talk about collateralization and you talk about really taking assets and creating other assets, that's how you use this in advanced leveraging. When you start talking about the super rich and the super elite, that's the thought process that they get into. They get into taking one asset to pay for another asset. And Shantae gave you a perfect example in terms of having your interest only coming out of your annuity every single year. So you can take penalty free, up to 12%, depending upon which product you choose. That's a perfect strategy to live off the interest and use that to pay for something else, maybe a new real estate deal. But that's cash that's coming out of an asset. That's not cash that's coming out of your pocket. So I want you guys to start thinking that way. That's the way the ultra rich think. Shantae, I can't see the slides.
It's up there. Can everybody see? Jennifer, are you seeing it?
Okay, I got it. I got it. Okay, so yes, I just wanted to point
Yes,
that
I can
out.
see it.
All
Mhm.
right, now, yeah, I can see it now. So I really just want you guys to understand how powerful this vehicle is when you start talking about collateralization and you start talking about leveraging. A perfect scenario, a client had an entire portfolio and he was able to take his locked assets because it's a 10-year product. You take this locked asset to the bank and say, hey, I want to get a loan against this portfolio. And they gave him a line of credit based on his entire portfolio because he showed assets that he couldn't just go spend. This is locked in for 10 years. And a lot of real estate people say, well, I'm never going to lock up my cash. I need liquidity. Well, remember, you have that penalty-free little buffer that you can basically take interest only off the top so that your principal stays protected. And I also want to point out that this is not like the stock market. This is what's called principal protection. It comes in a contract that you sign. And what it does is because they never put your money in the stock market, they just use the market as a barometer to determine what you get credited. Your money is never at risk. So what happens is you get some of the upside potential when the market does good, but guess what happens when the market goes down? Can you bring up the next slide that shows that, please? What happens is you don't get any credit for that year on the interest. So that's what indexing is. If any of you guys are familiar with indexing, the fixed index annuity gives you the opportunity to gain with no loss. So did you know that anything exists in this world where you have no loss? A lot of people say, I didn't know that. Yes, fixed index annuity has principal protection, so you get some of the upside potential, but none of the downside risks. So this is a perfect example with the S&P strategy showing that somebody who's on the market is going to dip. And the problem when you dip, guess what? It takes 10 years to get that money back. You don't want to spend that much time recovering with your portfolio. You're going to lock in at zero, right? And that year, you just don't get additional credits. You're still going to get your base credits. Remember, your base credit is at 6.25% compounding, but your additional credits will be at zero for that year. So this is a perfect example where somebody on the market dipped, but look what happens on the blue index strategy. You still end up ahead because of the fact that you don't have any market volatility and you don't have any downside risk. Can you go to the next slide, please?
Mhm.
So here's all your traditional stuff that most people are familiar with. I'm sure everybody on this call is familiar with everything over here on the traditional side. But what we want to introduce you to is the fixed index annuity. This gives you the opportunity to receive anywhere between the 5 and 10% bonus with all deposits when you initially roll it over, plus any additional deposits within the first 12 months.
And remember, TK, this is last month's slide, so the rates went up now. There's no more 5%. It starts at 16% now on the asset show. Yeah.
So you get the upside gain with various different crediting strategies. What I typically do for my clients is I'll pick the top 4 highest percent crediting strategies, and then I'll divide that at 25% on each. But you definitely have the ability to adjust it at any given time based on your savviness. So no losses. Did you know that principal protection even exists? Are you just for the first time hearing that there are investment products that give you principal protection? No rollover fees, transfer, convert, any type of product. So basically what I try to tell people is, listen, let's take an asset you already own and let's move it to pay for your retirement, because this has 2 components. It has a pension component where after you turn 59 and a half, you can turn on distributions. And it also has the compound interest that gains every single year where you can live off the interest and get into some collateralization, right? Lifetime income rider. That means even if, so this is the difference. I want you guys to understand this. This is the difference between stock market, traditional stuff over here, and a fixed index annuity. You know that once you get to a certain level, let's just say you invested and your portfolio was sitting at 500,000 and you turn on a distribution to your 401k. First of all, you're going to pay taxes on that money anywhere between 23 and 40%. And then also, as you begin to take distributions, guess what happens? Your account depletes, 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 depletes. Eventually, it gets to zero. That's why people end up at Walmart, because their account ran out. A fixed index annuity has a lifetime income rider, which just means that even if your account depletes to zero, as long as you're still alive, they will pay you up into the age of typically 114. So that's built into the contract. That's the benefit that people don't know, the difference between an on market and off market. Fixed index annuity is off market, and they will pay you up until 120 years old, even if your account depletes to zero. And then Shantae already talked about the wellness or well-being rider. That means that your income will double. If you made it to 60,000 a year for 5 years or up to 5 years while you're sick, instead of 60,000, you'll get 120,000, because they want to give you extra money to cover your medical expenses. A lot of us know and don't admit that with the food that we eat and the lack of exercise, one day the doctor gonna give you some bad news. Shantae already talked about her medical emergency. So when you have a medical emergency, if you have a fixed index annuity before you get sick, you can double your payments. You can get money to get better treatment. A lot of people decide to go at it alone, and then they get medical bills that basically bankrupt them because the doctor said they're sick. And then, of course, the last thing is a penalty free, so you can live off the interest. Next slide, please.
So
So
this, yeah, go ahead.
go ahead.
Mhm.
No, go ahead.
Yeah, so all this was just, that was the meats and potatoes. We're still gonna get more information later. I'm gonna let TK still get more insight. This is just showing the generalities of what people generally, how they generally invest, how they divide up the investments. And usually people have investments in one of these four, or if not all four. Now, we definitely recommend, I think you should have all four, but of course the safer of the options are going to be between real estate, the annuities, and anything that pays in the form of a pension. So, we just try to make sure people are educated in the risk tolerance that they have. We know that, stocks have a high tolerance, but they have also a high possibility for growth. So, I used to be a gambler back in the day. When I say gambler, I like to take high risks. But at the older that you get, we try to go with the rule of 100 when we're helping people plan. We just want to say, based on your age, if you plan to live to 100, that's the percentage of money that should be in safety or in safer vehicles. But in safer vehicles, that still experience growth. You could still have bonds, you could still have stocks. You can do one of the things that aren't on here that's more becoming more popular. We're going to have a class on digital assets and understanding Bitcoin, things of that nature. Even those things have associated risks, they're still not bad for growth as long as you're educated, know how to use these tools and how they can benefit you. We definitely make sure people are cognizant. Just in the last 20 some years, most of these things have occurred as long as I've been an adult, where we've had multiple market crashes. So, you got to just take that into consideration, is that if you are growing a good majority of your money in the market, then if you're taking a high dip, even though you can make it back, it takes a period of time to make those funds back. And that's when I talk about pain index, because people have to realize, well, what is your pain index based on your age? I started life in the lost decade. So 10 years, people were not earning well. We went through a recession. We had a war. We had the dot-com bubble. We had the real estate crisis. So it's just that you have to know by the time you get to a certain age, well, based on my goals, how many years do I have to be able to be where I need to be? And how can I make that happen? So, I'm just going to go very quickly through this. This is the benefits of an annuity versus maybe other variable vehicles, protection of principal. And, when you go to the bank, I was in banking for several years. When I left banking, people were earning only 0.05% interest on accounts. When I started in banking in 2000, people were earning 10.5% on the money market. So those were the good old days. My last CD back then was 7.4%, and I thought that was a low rate. But guess what has never come back since then? The banking industry has never given any type of interest that makes sense or any upside potential. And then I used to get the 1099-B tax bill for the interest I earned every year. So these are some of the benefits of, investing in an annuity, regardless if you're younger or you're older. I wish I would have known this 20 years ago, but now I know and I'm sharing with others. And ultimately, you have to pay taxes one way or another. As a licensed tax professional, I can tell people that we are technically in the lower of the tax brackets in the last 20 some years. So if anything that may happen going forward, we talked about the big, beautiful bill in our event with Omni last night. So some of the ways these different changes that may happen going forward in our country, it could bring taxes up. So either way, we know in society, taxes are more likely to go up than go down. So if you pay the taxes now and contribute tax after tax, then the money you get later on in life will be tax free. And then if you don't pay the taxes now, at least you can earn tax deferred. But just keep in mind, if you're in a state that taxes these type of vehicles after a certain age, you may or may not have to pay taxes. So the ultimate goal is that we're sharing all this information with you today, both from real estate investing, we're going to talk about so much more going forward. We want to help people in every area of life. But at the end of the day, it's your life, it's your family, it's your business, it's your plan. You can use any of these tools that we all have to share. There are people on this call that have a wealth of knowledge. They may be our presenters next time. There are people that may have other things to share that can help us with everything we need to do to reach all of our goals. So we just want to make sure that you are getting meets and you're getting content every time you come to us, whether it's an in-person event or on the webinar. So TK, I'm going to let you take this part back over if you have any last closing remarks for our part of what we're doing here today.
Yes, thank you. I just want to say I appreciate everyone's time. Thank you for coming out. Please realize that we do this every single month. Invite someone else. Here's our contact information on the screen. The QR code will take you directly to our one-on-ones. We do free consultations. It doesn't cost any money to talk to us. What we'll do is evaluate. We have a legal and fiduciary duty under our license where we have to go through the 5 W's and the needs analysis. And the idea is to figure out what I try to do with all my clients is figure out how I can pay for these vehicles without any money come out of your pocket. That means if you have an asset that isn't performing well, let's redirect it into a vehicle that's going to give you a bonus, plus over the long term, give you a pension, plus in the long term, give you that disability payment, just in case you get that bad news from the doctor. So thank you guys for taking the time to spend this. Please come back next month and also come to our in-person, which we do in Tyson's Corner every single month.
Oh, also, I want to make sure anybody out here, before we let people go on our last segment on anything that we talked about, does anybody have any questions? That's most important. I want you to make sure you got clarity and you understand what we're talking about, even though you may meet with us or each one of us, Melissa, Jennifer, or myself or TK, about any of the things we spoke with today. Does anybody have any questions? You can feel free to speak now. And then before we leave, I do want to make sure everybody had an opportunity to just let everybody know what they do. LaShonda put her information in the chat. Omni put his information in the chat. Does anybody else want to say anything or ask any questions? All right. Going once, going twice. All right. So if you don't have any questions, make sure you scan the QR code that takes you to our business digital card. We do have a calendar there where you can schedule a one-on-one, like TK said. Our next event is going to be on July 16th. We're trying to keep our webinars to every third Wednesday of the month. So if anybody is interested in strategically aligning with us to be a speaker or for us to come to your organization and speak at your event, along with if there's anything that we have spoke about today to all the people online that might be purchasing property in the near future. I know Claudius, you expressed interest. In fact, Claudius is on the line. Claudius, can you just give us a minute or so and tell us what you do? I know what you do, but people here need to know what you do and how they can reach you as well.
Yeah, of course. Thank you so much, Shante. I'm Claudius Taylor. I'm in the field of venture capital, also connected with a lot of PE folks, private equity folks. That's what PE is. I help people gain opportunities for raising money for their business via grants. And then, of course, also venture capital if you have a startup. I also do advisory through TEDCO, which is a state-funded program in the state of Maryland that provides people with opportunities and access to capital, technical resources, IP, etc. So lawyers, financial planning, and accounting services, a lot of those things as well. We also can serve Delaware, Virginia, and then also Philadelphia. So don't feel like if you're not in the state of Maryland that you're left out. Really excited to be here. I've known Shantae and TK doing great work in the DMV region, and look forward to supporting in any way that I can. You all can reach me at Claudius at Generator, GENER 8 TOR at gmail.com. And you can also check out generator.com for any of the programs that we run. Thank you.
Thank you, Claudia, so much. Please put that in the chat so everybody can save this chat today. Everybody should have put their information in. The goal is to be a community of resource and connectivity. So if there's anything you heard from anybody today that, where you can connect, learn from each other, and grow together. And that pretty much takes it for tonight. Melissa, do you have any last minute words for anybody?
No, I really just want to say thank you everyone for joining. If you have any questions regarding any of the programs that we talked about, the SDR, whether with any of the features that we have available, please feel free to contact us. We're more than happy to assist you, okay? So thank you for putting this together, Shante.
All right, thank you. And Jennifer, do you have any last minute comments? Jennifer, you still with us? All right, it's okay. But Jennifer's information is in the chat to anybody that needs any help. Everybody will get a copy of this recording. If you did leave your email, if I don't already have it, Jennifer gave a great presentation earlier. She is with Metro Realty 360. Save the chat, reach out to her. She's been in the business a long time, and she does a lot of specialized things that a lot of real estate brokers don't do in this area. All right. Well, thank you very much again. Once again, I thank everybody for their time. Oh, the next event is going to be July 16th. Just scan the QR code. You will be able to see the link in the Eventbrite by tomorrow. Have a wonderful rest of your day, everybody, and take care and be blessed.
Thanks for
Bye.
coming out, everybody. Thank you. Have a good night.
Have a good night. Bye.
All right. And I see Omni is the last to go. Let me stop recording.